Ladies and gentlemen, welcome back to the Future of Money Virtual Summit, the world's largest online cryptocurrency event. We are here on the line with Matt Morris. Matt Morris is a successful entrepreneur and trader. He's going to be talking about trading and investing in blockchain and related stocks and ETFs. John Tarr, our co-host and founder of Totally Crypto, will be introducing him in just a moment. I just wanted to give you a rundown of the upcoming speakers we have for today. Following this talk at 12 p.m. Pacific, we're going to be joined by John Bowens and David R. Allen. They are with Equity Trust, and they are actually doing an encore. They were on the summit earlier, and they're going to come on and talk about equity. At 4 p.m. Pacific, we have Barry Cohen. He's going to be talking about Crypto 2.0, the new playbook for crypto millions. So you won't want to miss that. And then finally, tonight at 7 p.m. Pacific, we have Adrian Nuclescu. I'm sure I'm pronouncing that wrong, but it's a tough name. He's a global entrepreneur and keynote speaker and crypto influencer. So that's what we have in store for you today. We also have 2 more days of this summit this week with 5 talks a day. We've got James Altucher coming up on the last day, so you won't want to miss that. Last thing, under this video, we have some share links for Facebook, Twitter, and Google. If you click those, you can share this with your friends and family. We want to get this important information out to as many people as possible. We're talking to some visionaries on this summit, and it's really great stuff. So without further ado, John Tarr, why don't you take us away?
You got it, Ryan. Thanks. Welcome back, everybody. Super excited to have you back. I'm John Tarr. Let's dive into our handy disclaimer. Remember, the content of this summit is provided for informational purposes only and is not intended to provide any specific tax, accounting, legal, or other investment advice or provide the basis for any financial or investment decisions. You should always consult with a licensed professional to seek advice specific to your own situation. Also, remember that down there's a button, and you're going to see it for our cryptocurrency training kit. It's a special offer during the summit that gets you all of these talks, including the talk I'm about to have with Matt Morris, 40 hours of talks, 25 plus speaker bonuses, and a program called the Cryptocurrency Mastery Program. The regular price for that is $497, but you can secure that now for just $297. In my opinion, it's the most comprehensive training package on the market. It's absolutely unbelievable. Just our last talk alone is worth that. Now, let me introduce my friend Matt Morris. Matt has been an active trader of stock options and cryptocurrencies and an entrepreneur for over 10 years. He's the father of 5 kids, a Little League coach, and a gold panner. Matt, I'm going to have to ask you about that. So he's going to be talking to us today about trading and investing in blockchain-related stocks and ETFs. Matt, welcome.
Hey, thanks for having me, John.
Dude, what is a gold panner?
Well, I was looking for some interesting things to put in my bio there.
And then that came up, huh?
But yeah, we are, as of Christmas last year, I heard about this thing called some kind of gold miner kit. I guess it came on Shark Tank, and so I went out and bought one for my kids for Christmas, and it was kind of a lull between baseball and all that stuff. So we got a little creek down the road from here. We live in South Carolina. Apparently, there's gold here somewhere. We just haven't found it yet, but we're sure having a lot of fun trying to find it.
That's awesome. So once you find gold, are you a professional gold panner then?
I'm not sure how that works. I guess if I find more than $5 worth.
Awesome. That's so awesome. So I have 2 questions for you. So the first question I'm going to ask you, and then I'll let you dive into your talk. But the first question, we've been asking this from all of our speakers. So how do you think crypto will influence the future of money and the world? What's your perspective on that? Blockchain, crypto?
Yeah. So I'm going to give an answer here that's probably toeing the line for a lot of folks, and maybe not as unique as some guys, but I think basically it's the decentralization. So, and the power to give people control of their money, in say, if you have a savings amount and, moving money around, wiring from bank to bank, if it's amount of money that's of any consequence, you have to get, jump through hoops at the bank. You have to bear in mind that, the IRS is, going to get a notification any kind of certain amount. And so, and I understand that, and I understand they want to track, money laundering and things like that. But I think it's just a revolution in giving power to people and taking it away from, the big conglomerates, banking institutions, and, giving us a little more privacy from the government. So, there's many, many more ways, of course, that I'm not talking about here. But I think basically just, decentralization, right, is kind of like one of the big themes of blockchain and crypto. And so that sums it up for me.
Yeah, awesome, man. Awesome. Thank you for that. Now, I want to just, as I introduce you, will you please, because I think you're an interesting dude. I think you're a good dude. And I mean that. Like, there are people out there where you're like, the guy's a brilliant person, but I'm going to stay quiet as far as like personally how I feel about him, right? So whatever. You're a good dude. And I think you've got a cool story of how you even got into this whole trading thing. So will you share that? We met, I want to say it was 2 or 3 years ago now. I can't remember. And we're on the phone and I was like, oh, how'd you get into this? And you told me the story of the penny stock program gone wrong, right? So tell everybody about that story.
Sure. So, I've been an entrepreneur for a long time. It's actually over 10 years because I was in window tinting before that, but I'm not counting that. I was always kind of fascinated, I guess, with the stock market. So I used to listen. Jim Cramer used to actually have a radio show in the 2000s that was popular. I used to listen to that while I was tinting windows. And so that kind of whetted my appetite. And then so I do some research online. And so quickly I realized, kind of realized, I guess, that the way to take a small kind of grub stake, $500, $1,500, whatever, and multiply that quickly was with penny stocks. And so and it can be done, but I kind of learned my lesson the hard way after having a little bit of success of not being careful with my what percent of my portfolio I put into one play and things like that. And so there was I learned about the pump and dump phenomenon pretty quick there. I thought I had it figured out, but the market taught me another lesson. And so, there's been a lot of lessons I've learned. And so, fortunately I've been able to, kind of develop into a profitable trader, which is nice. So I'm not just donating money to Mr. Market, as they say. But so yeah, it's something that it's just really enjoyable for me to do. Make some money and help other guys and gals do the same thing.
Awesome. Well, you've got a presentation. You're going to dive in. We're going to talk a lot about just trading EFTs, blockchain type stocks, right? You're going to dive into that. You do some cryptocurrency stuff, but we kind of wanted to hit it from a different angle. So take us through your presentation. I'll turn it over to you. I'm reserved the right to interrupt you if I have a question. So
yeah, no problem. Okay, let me figure out how to do this here. I know how to do it, but I just got to click the button here. All right, share screen. And okay, so it should be showing my my slides right now.
I can see them.
Okay, great. So I gave it the title of Trading Crypto-Related Stocks Like a Pro and ETFs. I left the ETFs out there. So John already covered a disclaimer, but here's mine. I won't read it out loud. I'll just kind of leave it there for a second, let you guys read that and take a swig of water real quick. I guess the copyright kind of belongs to John and you guys too, since it's your summit. But so what you'll learn is which stocks and ETFs have a big crypto or blockchain related footprint, how to swing trade them, also to hedge bullish bets so you don't lose your shirt if things get crazy, right? So you're kind of like in a little, kind of mini bear market, I guess, right now in crypto. Also, which stocks and ETFs to play for Bitcoin's eventual retake of all-time highs, also known as being what I call, I guess, hodlable, right? So I'll coin that term here. So first, let me tell you a little bit about myself. John kind of did already in that interview, but so I father of 4 and 5 with a question mark because the 5th kid that I'm raising is actually my nephew, and he's 16, so he'll be 18, before you know it in the blink of an eye. But he is living with me, so I say father of 5 children. So born again Christian. I'm a trader of stocks, options, crypto, Cleveland Browns fan. John, I don't know if you're a Browns fan or not. I know you.
That's rough, brother. I had no idea. My thoughts and prayers are with you. I have a lot of friends that are Cleveland Browns fans, so
yeah. So it's rough, but we always have the Buckeyes, right? So
that's right.
So originally from Toledo, Ohio. I was actually born in Youngstown, Ohio, and I was raised in Toledo, Ohio. And I now live in Columbia, South Carolina. Much nicer here. Don't have to deal with the snow and the cold weather and all that. I'm sure you guys realize that. So here's a couple pictures of me and my family. On the left here, my left is us kind of sitting and just chilling before a minor league baseball game. We have the Columbia Fireflies here. That's where Tim Tebow played last year. If you guys heard about that, I'm not sure. On the right is Noah's Ark. That's in Kentucky, which is really, really cool, just south of Cincinnati. I highly recommend that. If you guys are ever in the Cincinnati area, you want to check out the Noah's Ark replica. It's a life-size replica. And so really, really cool. So that's me and my wife and 4 kids in that picture right there. My nephew that I referred to is actually not in any of these pictures. But anyways, so you might want to say, am I a profitable trader? So here's a screenshot from one of my accounts, my equity, my P&L chart. So you can see it kind of just trickles higher, about 70,000 over the last couple of years in this account. So you just want to kind of make sure who you're listening to kind of knows what they're doing, right? So hopefully that helps. Also, there'll be a free gift PDF that'll be shared. I was told that you guys will be given a link that I don't need to worry about that. So, but if I do, I have the link ready to share with you guys at the end of the presentation. All right, so let's go ahead and roll in. So let's talk about stocks first. Okay, so as a disclaimer, I'm not going to cover every single blockchain or crypto related stock. So some of you might have some stocks on the brain right now and say, when we get to the end of the presentation, you might say, well, why don't you cover this stock? Well, I'm only going to cover a few because I know your guys' time is valuable, but I am going to cover the ones. I'll take questions afterwards. But so let's get started. So NVIDIA is the first one. So they sell GPUs, that's abbreviation for graphic processing units. Now, Bitcoin miners need these things like crazy to be able to be Bitcoin miners in order to mine Bitcoin. So in part, what they've acknowledged, experts have acknowledged, is that Bitcoin miners have kept GPUs basically sold out. They basically buy them up faster than NVIDIA can pump them out of their factories because of the boom in Bitcoin mining. Now, I know there's been, like Kramer on CNBC tries to poo-poo this and say, well, it's not necessarily the Bitcoin miners, it's the gamers. The reality is it's a combination of both of them, but there can be no doubt that Bitcoin miners are buying up these GPUs like crazy. And in turn, NVIDIA has a pretty good profit margin on those. So that's helping to drive up the stock. Okay, so here's just a screenshot from an article that kind of, lays out that case for me. So here's a chart of NVIDIA. And I have a couple red circles on this chart that you guys can see. And so what this chart is not kind of a straight line chart, right? These are called candlesticks. Many of you probably already know that, but those are called candlesticks. And so as you might imagine, the white candlesticks are days when NVIDIA goes up. The red ones are on days when it goes down. And so, but the red circles are instances where the 20-day exponential moving average, and I'm going to try not to get too technical. This is pretty simple, so stick with me, where the 20-day exponential moving average flips above the 50-day moving average. And so what that does, guys, is that signals a switch to a bullish trend. Now, vice versa, when it flips to underneath the 50-day moving average, that signals a short or midterm, even sometimes, bearish trend. So that's a pretty quick down and dirty way to kind of gauge whether or not a stock or an ETF, not just a crypto or blockchain related, but any stock or ETF really, is in an up or an downtrend. Now, sometimes you'll get some chop back and forth and it won't really be that helpful. But for the most part, that will kind of give you the signal you need to know when a stock or ETF is in an up or a downtrend. Okay,
and Matt, does that applies to crypto market as well?
I think so. Totally. Yeah, absolutely.
Pretty much any market. Okay.
Oh yeah. Yep. Yeah. So that would be so this kind of indicator would not be, say, John, this wouldn't be for guys that are just looking to get in like, 3 to 5 day swing trades. This would be for guys and gals that maybe want to say, okay, I want to establish a position, take a few days to establish a position, and then maybe hold it for, 2 to 6 weeks even, right? So yeah, that's kind of the idea there with
Cool.
trading based off of that. And then, so that's NVIDIA. I mean, that pretty much sums it up. They report earnings just like every other publicly traded company quarterly. So that's every 3 months, right? And so you can get those dates for the earnings reports. You can go on. There's sites called. There's one called Earnings Whispers. You can go on Briefing.com, Yahoo Finance. So you'll stay abreast of when those earnings come out. Sometimes the stock can trade a little more volatile around those earnings dates. So you want to be mindful of that before you take a position. And so that pretty much sums it up for NVIDIA.
Here's a question for you, Matt, just for people that may or may not know this. So can you explain the difference? You're talking about earnings, which is more fundamental type stuff. Can you explain the difference between technical analysis and fundamental analysis? And what do you lean on?
Oh, totally. So technical analysis is basically just looking at a chart, which is what you're looking at right now on your screen. Now, there's different time frames. This is a daily chart. So each one of these candlesticks represents 1 day of trade where the stock market opens at 9:30 a.m. Eastern and closes at 4 p.m. Eastern time. So this doesn't include the time before or after that, when the pre and post market. But so every candlestick encompasses 1 day's worth of trading during regular market hours. Now, so that's technical analysis. Now, other things that people do in technical analysis, you can look at different time frames. So I can pull up a chart right now if I wanted to of NVIDIA just based on 1 hour candlesticks. But all of that is technical analysis. All of that is, charting. Charting is the same thing as technical analysis. So when someone says, I'm a chartist, okay, that means they rely either 100% or for the most part for their trades based off of what they see and what they forecast based on what a chart looks like. Now, so that's pretty much the summary. And then the fundamental analysts, there are some guys that just won't even, they'll very much try to not look at a chart. It's kind of hard not to look at a chart at all if you're an investor or a trader. But what they'll put their, the most weighting on is fundamental analysis. So what they'll do is they'll say, okay, I'm going to look at NVIDIA. I'm going to look at recent upgrades, downgrades. I'm going to look at, say, the last 1, 2, 3, or 4 earnings reports. Did they beat expectations on the top line, which is revenue, or on the bottom line, which is earnings, after expenses? And they're going to look at guidance. When the last time they reported earnings, what kind of guidance did they give? Because a CEO will give guidance. He'll say, okay, we beat expectations this quarter, but next quarter, hey, it might not be as good, guys. And so all those different moving parts with fundamental analysis, and it is a lot, man. But the basic gist of it is the company, number one, growing top line revenue? And number two, are they profitable and are they growing that profit? So sometimes you'll see stocks that are growing top line revenue and the stock's going up, even though they're losing money on the bottom line. So those are typically early stage companies. But you have a company like NVIDIA, which is doing both. And so that's why the market has really rewarded this company in the last, say, I don't know, two years or so. So I hope that explains the difference between tech.
It does. Thanks. Is it safe to say that you use both of these in your analysis?
Yeah, absolutely. So what I'll do is, usually what I do is I look at a chart first, and then I'll say, okay, what's the story behind the story? Because the fundamentals will tell you that. The chart just shows you price action. So I want to know the story behind the story. I want to know, okay, if a stock went from $50 to $200, that's great. But I want to know what the story is behind that, because I want to try to gauge on my own mind if there's still runway left for that earnings growth story, right? Or that revenue growth story. And so that's not always easy to do, but from following the market for as long as I have, a lot of times I can kind of decipher that. as long as it's a business that I understand.
Yeah, awesome.
Yeah. So, but I use both, definitely. I factor in both tech and charts and fundamental analysis.
Cool. Thank you for sharing that. And by the way, like I said, I've been doing a really bad job of this all summit long, but if you do have questions for Matt and you're watching us live, make sure to just comment in, and Ryan will send them over to me, and we'll ask him. So go ahead, man.
Okay, cool. So, so that's NVIDIA. Really, great performer for people that have been in the stock for the last couple of years.
I'm just going to cut you off real quick, not intentionally, but I'm so glad that we're having this conversation, because we had Tim Mai was on last week, and he was talking about mining, and he was talking about these graphics cards.
Mm-hmm.
And quite frankly, I'd never put 2 and 2 together to think, oh yeah, right. I mean, the whole, who was it, Mark Twain, that said when everybody's panning for gold, sell shovels. And so this is a great example of that. So I'm so glad that you're doing this for our audience. And just, there's a lot of opportunities in this market outside of actually buying the cryptocurrency. So thank you again.
Yeah, exactly. So, there's, I think another example too of kind of like parsing out, different kind of ancillary, I hope I'm saying that right, ancillary plays in the market. But like, say for a few years ago when GoPro IPO'd, the GoPro stock, I mean, the thing went straight up almost. It's been a crappy stock ever since. But the thing that people caught on to, and another stock that did well as the GoPro kind of fever pitch was, kind of still ascending, was a company called Ambarella. So what they do is they make kind of the, I don't know exactly what they're called, but there's some kind of chip that goes in the GoPros to process, all that camera footage and stuff like that. And so, people put 2 and 2 together. Hey, if these GoPros are selling like crazy, then this Ambarella company should do well too. And if you look at the 2 charts, they're very comparable. And actually, Ambarella outperformed GoPro there for a long time. So yeah, there's always that's the cool thing about the stock market. There's always kind of a sympathy plays, is what some people call them. Yeah. So same thing with Apple and Skyworks. They make the chips that go on the iPhone. So yeah, but there's always opportunities out there. Okay, so let's go ahead and move on to the next stock I was going to share with you guys. So that's Gain Capital. The symbol is GCAP, so GCAP. And so what they do, guys, is they're kind of like a broker where you can log in, create an account, log in, and then trade different things such as Forex. But they've also rolled out some platforms where people can now trade cryptocurrencies without actually having to own the cryptocurrencies. So, from what I understand, there's still actually some countries where it's the government has tried to make it illegal to own cryptocurrencies. But if you create an account with Gain Capital, you can go and actually trade cryptos without owning the crypto, if that makes sense. So you won't actually have to take possession of the private key. They'll do that for you. Gain Capital will be the custodian of that for you. And so right now, however, it is a small percentage of their overall business, of their overall revenues. But as you can imagine, especially when cryptos get hot again and Bitcoin starts to ascend back towards those all-time highs and eventually retakes it, which I believe it no doubt will, this company presents a lot of upside. There's also the reality that Gain Capital is a very well-run company. You can see it kind of had a blow-off top, what I call a blow-off top back here in late December, when crypto mania was kind of at fever pitch. And so, it just had this huge 2-day move and then it's, settled back down into a range since. But this is a well-run company, guys, that has good management. I've been through the filings. I've been through the conference call transcripts. This isn't a fly-by-night company. They have a good balance sheet, so you want to look at that kind of stuff. That's not loaded with debt. I believe they pay a dividend as well. And so this is a company that's a really good, well-run company that also will give you some kind of exposure to the increased adoption rate of crypto trading. Okay, so that pretty much covers GCAP. Plus, it's kind of one of those nice cheap stocks. A lot of times I'll talk to guys that say, well, I don't want to buy a stock that's $240 a share. I only want to buy stocks that are under $10 a share. And, that's kind of flawed logic in some ways, but in other ways I understand it because we want that. We tend to see those stocks with low price per share go up faster than the others sometimes, right? And then another.
Matt, here's a question for you when you go back to that chart. I don't want to get complicated on people, but so is it safe to say, and it may not be, but is it safe to say, because one of the problems with trading cryptocurrency is the fact that you can't short the market, right? Like you can't short it. Is it safe to say that with these stocks, they're probably going to move somewhat in correlation to the crypto market, and there could be an opportunity to be both long and short?
Well, that's a good question, John. But I think that will probably be more applicable to the ETFs when I get to those here in a couple slides.
Okay, cool.
Yeah, because these stocks they are related and they do have a blockchain or a crypto footprint. But like with GCAP right now, it's more like a toe print. You know what I'm saying?
Yeah. Okay, cool. Yep,
yeah.
Got it.
All right. But good question. I'll talk about that when we get to it.
Yeah, I felt smart for a minute there.
No, it's a good question. So Riot. So this is the next one, guys. So I took this from their company webpage, this picture. And so they have a huge mining farm for crypto, for Bitcoin. That's a big part of their business. This is their chart. Just from a couple days ago, I snagged this screenshot. You can see it's well off the highs. This thing went absolutely crazy in December, hitting in the 40s, and then came down all the way down to $6, $7, $8 a share, which is kind of bouncing around that range right now. You can see the cash. They have 13.4. So they have some cash on the balance sheet. So, but this is a more speculative play. I would expect this one to do well again when Bitcoin goes parabolic, but probably not until then. But I did want to bring it to your attention. So it's probably the most speculative stock in my presentation today. That's just kind of what it is. It's a speculative play. So just be careful with that, but I want to bring it to your attention, guys. This next one is really, really cool. And I think it's a stock that most people don't know about. So that's why I'm excited to share it with you today. It's called, the ticker is IPOA. So this is basically what they call a blank check company. So what somebody did is they basically just formed a public company with a publicly traded stock that doesn't have any company behind it. So you might say that doesn't make sense. Well, it'll make sense once a company chooses to kind of fill the void there, because that's what happens with a blank check companies. I don't know if anybody knows what Del Taco is. Anybody? John, do you have Del Tacos where you live?
Yeah, we do.
Okay, so it's really, really good tacos. I think they're way better than Taco Bell. But anyway, so we have a Del Taco here too. And so what they did is they went and Del Taco became a public company by merging into a blank check company. So a blank check structure for a publicly traded company that didn't have. So what they did, they just entered in. So what it did is it kind of shortcutted the process of going through the IPO route. So the IPO route takes a long time. It takes a lot of money. So if a company wants to become a publicly traded company quickly, what they can do is they can just go ahead and just kind of combine with a blank check company, and then boom, right away they have access to the public markets. So this guy here, I can't pronounce his last name, honestly, but he's a guy. He's a millionaire. And so what he did is he raised $600 million for the IPO of his blank check firm. You can look at the date. I don't know if you guys can see the date on that, but that's from last year, September 14th, 2017. So the stock has pretty much done nothing since because, well, there hasn't been a company that has, come in to fill the suit of the company that's behind the stock yet. They say usually that happens between 1 and 2 years. So the more time goes by, the reality is there may be a company that comes into this blank check company. And so the speculation is that because this founder, this Mr. Chamath, was an early adopter of Bitcoin, is that through his contacts and through his tech savvy in crypto and blockchain, is that he may be able to take an existing private company that's in the blockchain space and have them go public via IPOA, which, would no doubt generate a lot of excitement if it was a well-known company that's looking to go private. So some candidates for backdoor, the obvious one is, right, Coinbase. So I think I've seen the Coinbase CFO on CNBC before, and he said that an IPO is an option for them. So they may end up going the traditional IPO route someday. But they also could just say, hey, we want to go, we want to go public as quick as possible. And they could choose to, use Mr. Chamath's blank check company here to go public. Of course, there's Kraken, another exchange, and there's many, many more companies that are private that are in the blockchain space that could use IPOA as a sort of backdoor way to IPO into the publicly traded market. So as I said a minute ago, time frame. So, this company started last year in the latter half of the year. So I'm thinking there should be a company that uses IPOA to go public by, say, maybe a little over a year from right now. So if you can park a little bit of money in IPOA and not really, sweat about what it's doing, a month, 2, or even 3 or 4 or 5 months from now, and just kind of leave it there as, to see what happens, see what company backdoors into the publicly traded markets by using IPOA, then hey, it's maybe something to consider. Okay, so I just think it's really cool that you might be able to get some action on Coinbase by owning IPOA.
That's super cool. Again, another thing I never would have thought of. So that's awesome. What's the difference for people at home and myself? What's the difference between a blank check company and a reverse merger, or are they the same thing?
It's very similar. Reverse merger is a kind of a term that I guess has a little bit of negative connotations for me because it's so much used in penny stocks, and sometimes there are legit reverse mergers, but this pretty much is a reverse merger, so there's not much of a distinction.
Okay, cool.
Yeah. All right. So you guys, hope you guys taking notes. IPOA is one you definitely want to check out. If you pull up a chart, you probably, yawn when you look at the chart, right? Nothing much going on. But what you want to do is understand that once that news comes, if it's news of a company that everybody knows about or a good company, you're probably going to be trying to get in. So I want to bring it to your attention now before the herd, right? So now we'll get into the ETFs. So the first one is Block. So it's ticker symbol BLOK.
Can you explain to everybody what an ETF is?
Yeah, so an ETF is an exchange traded fund. So basically, it's kind of sort of like, when I was growing up, the thing was mutual funds. I read, my dad taught me what a mutual fund is. An exchange traded fund is kind of sort of like that, but with a lot less fees. So it's very, very affordable to trade. There's not huge fees going to some mutual fund manager, right? So an ETF is basically a combination of a group of stocks in one particular sector. And
thanks.
Okay. So there's two I'm going to cover. So the first one is Block. And so what you can do is if you're interested in ETF, guys, is you can just go to handy dandy old Google and type in the ticker symbol for that ETF and then type in holdings, right? So what it'll do, it should take you right to the webpage for that particular ETF. And then you can look at exactly how many stocks are incorporated into that ETF. And it'll also give you a weighting. So what that means is, okay, for Block, what companies are comprise that ETF, and also what percentage, like, so say if, see Square right here is a 4.94% weighting in there. So that's a pretty big chunk, there's still a lot of other companies in there. But if Square has a really, really big day, if it goes up 15% or something based off of good earnings, you're probably going to see a nice little bump in Block as long as the moves in the other stocks don't cancel that out. So it's just good to know what stocks make up the ETFs that you're interested in, right? And so there's a couple here that are foreign companies or private, like Digital Garage, GMO Internet, right? And then some other ones that are more familiar, like NVIDIA, we talked about a minute ago, Overstock, of course, and just some more household names like Microsoft is even, crypto and blockchain related now, believe it or not. All right. And then, so here's a chart of Block. Again, you see that handy dandy 20-day exponential moving average moving above the 50, guys. So the pink line moved above the blue line. So you can almost, stick a flag in the ground right there. And sure enough, it took a couple weeks, but the ETF has moved higher since, right? So it's one of those things where you maybe don't, when you see that signal happen, you don't go and load up the boat, load up the truck, entirely, but maybe a couple shovels full, right? So just try to build a position based around that when the moving average of the 20-day moves above the 50-day. So pretty basic. And also, like John was saying, on the flip side, you could play this and the one I'm going to talk about next to the downside if you wanted to. So let's talk about that next one, and then we'll talk about how to play the downside. So the next one is GBTC. So this one, there's a premium involved here, meaning, I've seen guys make a lot of very insightful posts about GBTC saying that it's not worth trading because there's so much premium baked into this ETF, which is true. But from my experience trading it, it hasn't been a factor. And so, maybe if you're looking at something for a long-term hold, this would be one where you would say, yeah, maybe not, maybe you want to wait until something that's not traded on the over-the-counter market comes out as a Bitcoin ETF. But for whatever reason, the SEC doesn't want to approve an official Bitcoin ETF yet. So for the time being, this is the most pure play on Bitcoin that you'll find in the publicly traded stock markets here in the USA. And again, you see the 20-day moving average kind of gives you a good finger on the pulse of whether or not it's in a bullish or a bearish trend. Okay, so you can short GBTC. So you can short sell it. So like John was asking how to play downside. So you could play downside in GBTC by short selling it. It does not have options because it trades over the counter. However, I do believe you can trade the options on Block. So if I wanted to say, hey, I think Block is going to go down because the companies in it, are weak or whatever, and they're too, and I think crypto is going down as a whole, then you could buy some put options or short this one. So there is put options available on BLOK, if I'm not mistaken. Okay. So also hedging. So I told you guys I would teach you about hedging. So, what you want to do with hedging is you don't want to use a lot of money with it, but basically you want to incorporate this strategy if you have a significant portion of capital in any one of these stocks. So the way to look at it is you want to use anywhere between 5 and 10% max of the money you have in that stock or ETF to buy slightly out of the money put options 6 months out. And I'll explain what that means here in a second. So as an example, if I have $20,000 in NVIDIA stock and say I've wrote it up from $100 to 260, which is where it is today. So I've made a lot of money on NVIDIA if I've done that. So what I want to do to say, well, I want to be able to sleep at night because, what if NVIDIA, and I'm not saying this is going to happen, but what if, some report comes out and exposes NVIDIA as the next Enron and it drops $100 overnight? It could happen. Not likely, but it could happen. So I want to be able to sleep at night knowing that I'm not going to wake up the next morning, and all my profits are gone that I've, been so patient, waiting to accumulate. So what I can do is it's June right now. So I would go out, say 6 months with the stock trading at 260. I would go out and go to the January 2019 expiration date and then buy some put options that are just a little bit beneath where the stock trades now. So
when you say put options, you mean that a put is a short, like you're saying it's going to go down.
Right, exactly. So
okay.
I just kind of skipped right through that, but thanks for bringing that up, John. So the puts are something that you buy if you want to make money when a stock or ETF goes down. And then calls are just the opposite. So if I want to play calls, I'm doing that because I want to make money if a stock or ETF is going to go up in a pretty, a pretty drastic way. So Thanks for asking that, John. I kind of skipped right through that. But so that's what you want to do in order to be hedged. And then hopefully, things go well as video keeps going up. Say it goes to 325 by the end of the year. Then, your put options will expire worthless. But if things go ideally, you'll have made more in the increase of that stock during that time span than you lost in those put options. So what they've basically done is they've acted as an insurance policy for your long position in NVIDIA stock. Now, so this is going to have to be something where, if you're trading with, say, $3,000 or $4,000 or $5,000, it's probably pretty tough to do something like this. But if you're trading anything over, $10,000, $15,000, $20,000, and you're planning on holding one of these stocks for any amount of time, or through a volatile event like earnings, you may want to consider some hedging strategies if you really want to stay in that stock for any amount of time.
Awesome. That's a great strategy.
Yeah, so it's it's something you can do the other way around. Like there's been times where I've been short like a really crappy penny stock, and for whatever reason, it just won't go down. Like I know it's going to go down, and I know the playbook. I know the CEO is saying it's just horse manure, but the thing just won't go down just as quick as I think it should. So what I've done is I'll buy, while I'm short the stock, is I'll buy call options a few strikes above. So say if it's $10, I'll buy call options like that are $12.50. And so that way I know if the stock, zooms higher, I'm going to lose money on that short position, but it's going to kind of soften the blow because I have some call options. So you can do it, the flip side as well.
Awesome.
Yeah.
That's one thing about this market. There is a lot of, there's a lot of options, no pun intended. There's a lot of different angles you can hit it, where the cryptocurrency market, you're pretty much long. You know what I mean? Like you buy and you're long. So I think that's something to point out for people. So that's cool.
Yeah. And, too, I was thinking too, John, just this morning, I was thinking, you have to deal with, the regulatory boards, I guess, a bit more when you're trading, like, say, out of an E-Trade account or Interactive Brokers or TD Ameritrade. At the same time, there's it's like an ease of use, where you can just wire money in, you can trade in, you don't have to worry about the wallets and things like that. And I do use wallets, stuff like that. But it's just easier for quicker trading. And I know Binance is gotten pretty good, is getting better and better all the time. But for maybe leaving a few positions on the table there inside your wallet there. But it's just, it's so fluid, and you have the options there. You don't have the cryptocurrency options trading just yet. And so, you have more in some ways. I know you don't have access to all the coins via the public markets, through a stock trading account or options trading account, but you do have the options, like you said, no pun intended, with the options.
Yeah, that's right. And I think if you're trading cryptocurrency out there and you're into that market, and so kind of the pulse of that market, this is a great way to maybe be able to take advantage of a down market. Rich, the co-producer of this event, used to be a huge trader, ran a big hedge fund, was a huge trader. And, he talks about the fact that, if you're in a bear market and you can't short, you better be out of it, right? Like you basically better be out of it if you're a trader in a lot of instances. I don't want to put words in his mouth, but this is a great way to maybe take advantage of a bear market to some extent. So I think that's really cool.
Yeah, exactly. So like one strategy could be, okay, so I don't want to get rid of any of my actual coins, which is how I personally feel about it. I'm the money I have in my coins right now is just, hey, if it keeps tanking, kind of sucks, but I'm not doing it. I'm not going to sell them, So a way to kind of play both sides of that is, I think crypto is still going to tank. I'll just go short GBTC, because that's and that way I can make some money in my trading account, in my stock, in my stock and options account, while I kind of take my lumps with my cryptos for the time being, because I think probably most of you guys that are watching right now, and myself and John, we obviously think that cryptos are going to recover at some point, maybe not this month or next month, but they're eventually going to recover and hit all-time highs again. So, but it's a way to make money while you're waiting for that to happen.
Yeah, that's great.
Yeah. So I think we're pretty much to the end. So I just want to recap a little bit. So we covered some stocks: NVIDIA, GCAP, Riot, IPOA. So I'll just go over those real quick. So NVIDIA, of course, they make the GPUs. Those are what the miners need to run their mining rigs. And so they've been sold out now, I guess, for at least a couple of years. They keep these things off the shelves. I've read multiple accounts of guys trying to go like in Best Buy and try to find GPUs. They're just nowhere to be found. And so that stock has done really, really well. And then GCAP is another one that's crypto related, sort of under the radar. Probably some of you have never heard of it, but it's a well-run company, good balance sheet. They are getting, like I told John, kind of like a toe print, not necessarily a footprint in crypto, but a toe print, because they're rolling out platforms where people can come and trade crypto without actually having to own the crypto. So they can trade the crypto without, opposed to getting a Binance account and going to Binance and buying some coins and leaving there overnight till the next day. Like, whoa, shoot, man, somebody might hack Binance and steal my coins. So you don't have to worry about that if you use GCAP's platform, because they're holding the private keys themselves, right? So they're rolling that out. It's a small percentage of their overall revenues right now. But of course, we expect that to increase and scale up in the months and years to follow, which would make GCAP a pretty good trading or investment vehicle for crypto-related stuff here in the near and midterm future. And then there's Riot. So like I told you, Riot is, it's going to be a wild ride. Has been already, and it probably will continue to be. CNBC even did like what they call, in the stock trading world, there's these reports come out. Sometimes the authors will put them on Seeking Alpha, stuff like that. There's Citron Research. He just posts his stuff on Twitter, and then he'll come on CNBC and do an interview of why he thinks a certain stock is going to zero. But we call them hit pieces. So actually, CNBC did a hit piece on Riot blockchain last year, and the stock really cratered. So you have that kind of stuff, and things kind of settle down where they are now. But just so it's. It could end up being a really good play, but for the most part, guys, it's really just a trading vehicle. And then another one is IPOA, which is really interesting, which John and I were talking about, which basically is a way where someone can reverse merge into this shell. It's kind of like a shell company, like a blank check company, an existing private company that may have exposure to blockchain and crypto, could become a publicly traded company on the U.S. Stock markets, which would be really cool, say, if Coinbase did it, right? But of course, I can't make any promises. That's just wild speculation. But with the founder having been an early adopter of Bitcoin, the speculation is that he's going to link up with a crypto-related company to become publicly traded in the U.S.
Somebody asked a question now that we're back to that. How many other blank check companies are out there like that you're aware of?
That may go into, that are looking to do something with crypto?
Yeah.
This is the only one that I know of.
There you go. So, okay, cool. That narrows it down then, right?
Yeah. Yeah. I haven't seen too many of them overall. I mean, I know they're out there, but I follow market headlines every day, and this one and the last one I played, like I said, was Del Taco, and that one did really good. So,
awesome.
You can imagine if Coinbase, made an announcement they were going to reverse merge with this, the thing would just be a rocket ship.
Yeah, for sure.
Yeah. And then the ETFs we covered was just two of them. So there's Block and then there's GBTC. So Block is more of that's probably more conservative of the two. It definitely is, because you've got companies there. You got like stalwarts like Microsoft, but you'll also have kind of up and companies like Square that are getting into crypto. You can play options on that one. On GBTC is an over-the-counter traded ETF that is tethered to Bitcoin, Bitcoin's price. No options trading on that because it's over-the-counter traded ETF. But it's a great trader. liquidity is not super great. You know, you maybe not want to use a market order, but it's been a great trader. I've had a lot of fun and made some money trading it. So that's tethered to the actual price of Bitcoin opposed to Block, which is a combination of crypto and blockchain related companies. Okay.
Awesome.
And then so a trading tactic that we talked about was go to so this is kind of like just me explaining how to do what I showed you. So if you guys go to stockcharts.com, if people are hearing you're in my audience, you probably already done this, but if you go to stockcharts.com and enter in any ticker of anything, but if you want to enter in one of the tickers that's on this screen right now, you can go in there and there's some drop down options. It's pretty self-explanatory, and you can just enter in exponential moving average and type in 20 and hit submit, and boom, it'll pop up right there for you. And the 50-day moving average should already be pre-populated. So boom, then you'll have that right in front of you. Just totally free as a tactic that you can use for, kind of short or midterm type trades.
That's awesome. And so you said when that 20-day moving average goes above the 50-day, it indicates kind of a bearish trend.
No, so that would be bullish. If it goes above
that's what I meant. Bullish. Yeah. Okay, yeah. Cool.
Mm-hmm. And then just the reverse, when it goes below it, that's time to get cautious. Doesn't mean, it's time to put on the big, because you still have to factor in, say, if NVIDIA has gone from, like it has, from what, like, $10 to 260 in 2.5 years or whatever. Just because the 20-day moving average flips below the 50-day, I'm not going to get super bearish, because So
here's a quick question for you. So Tim Sykes likes to talk about breakout patterns, right? Mm-hmm. He's a penny stock trader, and he talks about breakout patterns. And he's like, if basically the only thing you do as a trader is just basically search charts and look for breakout patterns, you can make a ton of money. He's like, if all you focus on is understanding how to identify a breakout pattern, would you say that your trading tactic here is similar, where if you're going through charts and you see this, that most likely you can probably profit from that? I mean, I'm not saying everybody's going to profit, and I know there are other factors, but if somebody learns how to identify this is a probable profit tool.
So the breakout patterns is a good tactic. That's a little bit different from what I'm teaching here right now, because
let me just say my overall view is sometimes, and I should have prefaced this. So certainly a breakout tactic is going to be different than your tactic here. What I mean, though, is that sometimes people want to make stuff super complicated, right? But if you kind of narrow it down to, like, you're going to go to charts and look at your tactic, that could be a very positive indicator that something's about to move. And maybe you could just focus on this one tactic and find yourself in a profit zone many times.
Right. Yeah.
You don't have to get overcomplicated if you're just starting out and know this and that and this red line and this red line and a circle and a dot, and you know what I mean?
Yeah. Yeah, exactly. So it is. And that's why I was like, let me I want to try to share something with everybody today that is really concrete and really actionable and really helpful. And, the thing that I go back to, because I remember the stock market bottom, everybody knows, in March 2009. And so if you were to go back and look at the daily charts of say the bank stocks, which were getting hammered the hardest back then, and you look, and the most definitive indicator in my opinion that the bottom was when the 20-day exponential moving average flipped above the 50-day. I mean, it's as simple as that. So, and the market pretty much hasn't looked back since,
That's awesome. That's such a great tip and tactic. Thank you for that.
Yeah. So, patterns and stuff like that, like Tim's really great with that. This is, I guess, more of something that's just pretty much, hey, you can go do it right now and look and, and see if the uptrend is intact or if it's a downtrend or if it's, maybe about to switch directions either way.
Awesome.
And then, so what's hodlable? So my coins are all hodlable. They're all going to the moon, Lambos for everybody.
You bet they are.
But they're not there yet. It's kind of still in the launching pad, getting fueled up. But so what's hodlable? So in my opinion, guys, NVIDIA is good. GCAP is definitely good. I would say GCAP probably has a good amount of upside if they continue to roll out their crypto offerings. Riot is not hodlable to me. Just a trading vehicle. Like for those breakout patterns that you said Tim Sykes was teaching, if you apply those to Riot, you probably make some money. But it's not breaking out; it's just dead money. And then IPOA is something that you could get in, and if you're patient, because it might not be till late next year before anything happens, potentially longer than that. But it might be till second half of next year till anything happens. But you might have a really cool reverse merger there. So if you got some money that you can maybe set to the side, and that you're not using for other trading and things like that. IPOA is definitely one to consider because of that reverse merger potential, say with somebody like Coinbase, which would be just huge, right? Block is hodlable. That's got good companies in it that are kind of evolving and getting more involved into blockchain, like Microsoft and IBM. And then GBTC, kind of sort of hodlable. But the question with GBTC is eventually they're going to have a competitor. There's going to be, you might as well just bet on it. There's going to be a better Bitcoin ETF that comes to the market at some point. It's just not here yet. So when that happens, though, you don't want to be in GBTC because that premium that's baked in the ETF is just going to collapse. So it is good for short-term trading, though. Really, really good for short-term trading Bitcoin without actually having to trade Bitcoin. Okay.
Awesome. That's super great. I'm going to close this down, and then I'm going to let you talk about your bonus gift that you have for everybody. So before we talk about Matt's bonus gift, and this is a great presentation, by the way, a reminder, it's going to be up on the page that you're watching it on. I believe that's totallycryptosummitlive.com. It's going to be up there the rest of the day. You definitely want to take some notes, especially if you're interested in trading. If you're like me and you like to trade a little bit, but you want to find some way to maybe trade in a bear market, I think this is a great thing for you. So make sure to take some notes, and you can own Matt's presentation and get everybody's presentation through our cryptocurrency training kit. It's going to get you downloadable access to the videos, audios, transcripts, and bonuses of all of our speakers, all for only $297. You're going to get instant access to that. So as speakers speak, it goes right up there in the training area. You're also going to get a special bonus training called the Crypto Mastery Program that Roger Bryan and myself created. And after the summit, the price of this training program is going to $497. So if you'd like to own the materials so you can refer back to them, now is the time to do it. Matt, share with us your free gift for everybody watching today, and thanks so much.
Oh yeah, so it's a PDF that I put together, and so basically, it's called the Backdoor to Crypto Riches. So it basically gives a little bit of overview of blockchain and crypto, and then just kind of goes over mainly the stocks that I already covered in the presentation today, but a couple more that I haven't. So it's just a nice clean PDF that will give you some good insight into these companies, kind of the story behind the story, like I said earlier, which is always good to know. You want to, if you have a stock in your portfolio, if it's more than just a day trade or a 2 or 3 day trade, you want to know what the heck's going on, and what kind of what's going on behind the scenes there at the company. We'll give you, the balance sheet stats that are, fairly recent, and things like that. So it'll be a good kind of a roadmap. Like I said, roadmap to, or a backdoor, to crypto riches, because it's a way to play publicly traded stocks and ETFs that you can buy right in your stock trading and options trading account, opposed to having to buy the actual coins themselves on the crypto exchanges.
That's awesome. And Ryan just told me that you can also click the link below this video and download that. So that's available for you. Matt, I appreciate, there's very few traders that I recommend and that I like. You're one of them, and happy to call you a friend, man. Thank you for being on with us.
Oh yeah, it was my pleasure. Thanks again, John.
All right, everybody. We've got more great speakers coming up today, so make sure to check back. And I think we've got 3 more presentations today, 2 more days to go on day 8. Thanks for being with us, and we'll see you in just a little bit.